the market share of all precious metals related investments, including physical precious metals, equities, and public precious metals debt, comprises less than 0.5% of the value of all savings and investment assets in the United States. That's important, first of all, because the number is so small. But secondly, too, because the 4-decade mean market share of precious metals and precious metals related assets was 2%. So if you had reversion to mean, which I believe you will, that means that the demand for this asset class grows fourfold in the largest savings and investment market in the world.
Rick Rule is a known gold bull, veteran investor, and speculator in the precious metals and resource sector. He is extremely bullish on precious metals like gold and silver, and describes both as real money and the natural conclusion to the collapse of the global financial system. Though both metals had a great run earlier this year, Rick expects much higher price increases after what he describes as the metals' reversion to mean. According to Rick, the market share of precious metals investments, relative to all classes of savings and investment products in the US market, is believed to be less than half of 1%, down from a 4-decade mean market share of 2%. Rick predicts we will see a reversion to mean in no distant future as the demand for precious metals and precious metals-related investments quadruple. According to Rick, the reversion to mean will impact silver prices even more than gold prices, and the white metals price will skyrocket wildly as investors scramble to seek shelter against the chaos of the financial system. The legendary investor envisions a time when peak realization hits and everyone realizes that the financial system is rigged to fail. Rick predicts that the demand for precious metals, beginning with gold and silver, will quadruple, and so will prices. Rick has always been particularly bullish on silver, which he often describes as a most hated asset, but the opportunity of a century for investors. When the next leg of the bull market begins, Rick is certain that gold prices will run much higher to around $8,000 to $9,000 per ounce, but silver investors will have a much better time of it all. In a recent interview with Liberty and Finance, Rick discusses his predictions and outlook for the markets and his thoughts on the possibility of governments confiscating investors' gold and silver stacks when prices go much higher. We will present clips from the interview. But before we do, please take a little time to like this video, subscribe to the channel, and the notifications bell for more videos like this. Thank you, and enjoy the video.
I've had hours of discussions with you, Dunnigan, about the reason why I think the gold price inevitably goes higher. And my experience has been that when gold establishes the momentum in precious metals, and then the generalist investor comes in, that the generalist investor is encouraged by the momentum in gold and buys the asset with lower unit costs and more volatility, which is to say silver. This usually occurs about midway through a bull market. No reason why history has to repeat itself there. But when silver assumes leadership from gold, it moves further and it moves faster. I know that the gentleman would like me to give him a date. I'm too old and smart for that. I would just suggest to him that we're in the early innings of a precious metals bull market, and he needs to be patient for gold to establish a dominant trend before silver really gives fireworks to the upside. It's worth waiting for, by the way, Dunnigan. Your younger audience won't be familiar with the dynamics of a silver bull market. The first one, of course, that I lived through was the 1970s, where silver went from about $1 to $50. That's not representative, I think. A better market to pay attention to was the early 2000s market, from about $5 to about $50, a tenfold move in silver. Too many silver bugs these days have low expectations, high expectations in terms of time, but low expectation in terms of dimension. I read all kinds of, I could care less about a $5 move in silver. I've experienced a couple tenfold moves and one 50-fold move. So a $5 move is of no particular interest to me. I don't think that the ratio, which is to say 16 to 1, matters, because it doesn't take into account utility. Prices move really as a function of utility. Silver has two utilities. One, which is highly speculative as a medium of exchange and a store of value, which is to say its investment characteristics. The other is its industrial utility, its use as a germicide, and its use as a reflectant in solar applications. I think the attention that silver adherents pay to the 16-to-1 relationship between the relative abundance of gold and silver in the Earth's crust is probably less important than the social roles that they've both played in terms of investment demand or the industrial roles that they both enjoy. Sure, the discussion about reversion to mean on your show, Dunnigan, referred to the fact that the market share of all precious metals related investments, including physical precious metals equities, and public precious metals debt, comprises less than 0.5% of the value of all savings and investment assets in the United States. That's important, first of all, because the number is so small, but secondly, too, because the 4-decade mean market share of precious metals and precious metals related assets was 2%. So if you had reversion to mean, which I believe you will, that means that the demand for this asset class grows fourfold in the largest savings and investment market in the world. I think that's a broad enough asset class and a broad enough competitive universe that reversion to mean is an important statistical tool. To the extent that you want to use reversion to mean in something more volatile or more constrained, seems to me problematic.
It's not uncommon for people, even the biggest gold bugs, to dismiss predictions of significant price increases for gold and silver because of the potential impact on the global economy. Every $1,000 increase in gold prices reflects further devaluation of the dollar. As a result, a significant increase to $5,000 or above per ounce of gold will cause untold hardship for everyone. Rent, food, and energy prices will be through the roof as the dollar would be worth only a fraction of what it is today. Many believe this is the exact reason why the suppression and manipulation of gold and silver prices will continue for much longer. But Rick says the day of reckoning is much closer than many believe. As more investors lose confidence in the US dollar and other fiat currencies, they will turn to gold and silver, driving prices skyward. On the probability of confiscation, Rick says politicians are simply too weak to face stackers, who will fight tooth and nail to keep their possessions.
I think, I wouldn't put any dastardly deed past the U.S. government, but I think the probability of it is low. People have asked me my whole life about the possibility of government confiscations of IRAs, too. The government can steal from you in ways that make them popular. Quantitative easing, which is to say printing more currency unbacked by anything, devalues the currency that you already have in your bank account. That's theft. When governments do it, they're popular. When government increases taxes on some, that's often very popular with the people that they didn't increase taxes on. It's a form of theft that gets them elected. When governments run big deficits like they are today, which is in effect stealing from the unborn or young people, that's popular with the people who are current beneficiaries of that. If you look at Social Security, Dunnigan, our generation, voted itself all kinds of cool benefits, Medicare, Medicaid, Social Security. Yes, we paid into them, but not to the extent that we're going to draw out of them. So the $100 trillion in unfunded, net present value of unfunded liabilities, the benefits that we will generate being paid for by younger people is theft. And 80% of the American population think that theft is more than justified. Given the fact that the government has all these ways to steal from us that are extremely popular, why would they engage in overt theft, which would be unpopular? I was reminded by a congressman, and I won't name him, that Congress is aware of the fact that there are 400 million guns in circulation in the United States. Think of yourself as a congressman. You run the risk, you run the ire of all the gold bugs, many of whom are armed, which is a risk, or you steal from the unborn, which makes you popular, gets you reelected time after time after time. Would you prefer to be loved for being a thief?
What does Rick recommend on either how many troy ounces or percent of a portfolio one should have in gold and silver?
That really depends on the individual and the type of portfolio one has. As an example, a 65 to 70-year-old retired person with a lot of time left on Earth, whose portfolio is 75 or 80% in long-term bonds, needs to own a bunch of gold. Inflation murders a portfolio like that. They will get the bond yields, but the bond yields will buy less and less and less and less and less. An investor who has a reasonably leveraged real estate portfolio, reasonably, not unreasonably, who's a decent real estate operator, who benefits from inflation, because the ability of competitors in real estate to construct new product in inflationary times to compete with his existing product is low. So that person would need to own less gold. So while I know that everybody wants a one-size-fits-all answer, there isn't one. It depends on the needs of the individual, and it depends on the composition of their existing portfolio. I own gold as an insurance asset. It helps me sleep nights and stay calm. And at 71 years old, 1 year of age, sleep is a very nice thing. I don't own gold because I think it might go from $2,400 to $2,700. I own gold because I'm afraid it'll go to $9,000 or $10,000. Somebody who has less fear than me probably wants to own a little less.
According to Rick Rule, when investing in precious metals, it is important to have a long-term time horizon and stick to your investment strategy regardless of fluctuating market conditions. It is obvious that we are in very uncertain times. The economy is showing more resilience than everyone expects, yet government debt continues to spiral out of control, and there will be more uncertainties and chaos ahead. This is why investors like Rick Rule advocate returning to trusted hard assets like gold and silver that have stayed true to their fundamentals for centuries. What are your thoughts on Rick Rule's interview and his analysis of the current economic situation and market conditions? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.